Internal Revenue Service IRS Tax News. Here's how taxpayers can pay the right amount of tax throughout the year. IRS Tax Tip 2021-81, June 8th, 2021. Federal taxes are pay as you go. This means that people need to pay most of their tax during the year as they earn income. This can be done either through withholding or estimated tax payments. So let me give a quick recap of this. Note that in a traditional kind of situation, we have a situation where you have a one income type of family and you have the person as an employee of, say, a corporation. The corporation then responsible for taking money out of the employee's wages every paycheck, which of course would be during the year, which would of course be like weekly, bi-weekly, semi-monthly, or monthly, paying that then on the employee's behalf to the government. Now, this can be done if you have a one-income household. It's pretty easy to do that, even with complex tax code, like a progressive tax code, laws that are changing all the time, so you don't really know what is actually happening. If you only have one source of income, it's still somewhat kind of easy to figure this out. However, during more modern times, and especially during the last couple years, many people are switching jobs all the time. You got multiple people working in the same household and using multiple different jobs, might be working as a W-2 employee and having other kind of income streams on the side. That makes it much more complicated to figure out what your tax obligations will be and pay them throughout the year. Because remember, what the IRS wants is a pay-as-you-go system, meaning for 2021, you need to be paying them in 2021, even though you don't file the taxes until April 15th, let's say, of 2022. So, and you might ask, well, if I switch, and this is where people mainly fall into problems, if I change from a W-2 employee to, say, a sole proprietor or Schedule C type of business where I no longer have someone else doing the withholdings for me, or if I move into retirement, no longer working for somebody, but now getting my income from some other source that doesn't have the same kind of withholding requirements, how can I possibly know what I should be paying the IRS? Because it's a progressive tax system. I don't know how much I owe them until I actually do my taxes, and that's not going to happen until 2022. Plus, my taxes are completely different from last year because last year was a weird year, and maybe I'm doing things totally different this year. So those are the common kind of problems, and what you need to do then is figure out in some way, and it usually takes kind of software, which at this point in time, the IRS has applications on their website that could be used basically as projection software to try to figure out what your estimated taxes should be and then pay them. If you are moving from a W-2 business to a Schedule C type of business, make sure that you are taking into consideration the estimated taxes, because if you do not, it's very common for people to get behind on their estimated taxes, and that can be very frustrating, make the whole business process a lot more difficult than it needs to be, and it's quite common. So make sure you're planning for the estimated taxes that need to be paid. Okay, so if the amount of income tax withheld from the tax... Sorry, I started to choke there. Hold on a second. If the amount of income tax withheld from the taxpayer's salary or pension is not enough, or they receive income such as interest, dividends, alimony, self-employment income, capital gains, prizes, awards, they may need to make estimated tax payments. Self-employed taxpayers may also need to make estimated tax payments. So being self-employed, picking up that gig work or that side job or whatnot, oftentimes will require you to make estimated tax payments, or maybe you can just adjust the withholdings on your W-2, but you got to make sure you do one or the other. You got to make sure that you cover your payments for the income level that you are at. If you can do it through the withholdings, great. If you can't, then you got to make the estimated tax payments. Why? Because if you don't, the IRS is going to charge you penalties and interest, most likely, and you could get backed up just in taxes in general and not be able to pay at the end here, and that's frustrating. So adjust 2021 withholdings. All taxpayers should review their federal withholding each year to make sure they're not having too little or too much withheld. Employees, retirees, and self-employed individuals can use the IRS Tax Withholding Estimator to help decide if they should make the change to their withholding. So this is kind of like a projection type of tool, which again is really what you need at this point, a more complex tool, especially since, again, with the taxes are totally changing from year to year. The code is changing. You can't depend on last year. People are moving around with the jobs. So you need kind of an estimator tool, and this tool is getting better So you can kind of use that to get some idea of what's happening next year. Usually you can base it on the prior year. So clearly, if you did your 2020 taxes and you owed money, that's an indication that something's off and you need to make an adjustment in 2021. But that is difficult to rely on the prior year because laws keep changing at this time, and people's wages are changing. People are going from unemployment and jumping back and taking on gig work, different jobs. So you can't really rely on last year as fundamentally or easily as we could have in the past to project what's going to happen in the future. So this online tool guides users step by step through the process of checking their withholding and provides withholding recommendations to help aim for their desired refund amount when they file their next year tax return next year. Now, note I think the IRS, of course, tries to emphasize this idea that they're giving a refund, that you're getting the tax refund. You want to aim for the tax refund amount. Your real goal is usually to avoid penalties and interest. The IRS mandates or runs the process not with incentives, with a stick, right? The stick is, if you don't do this, we're going to charge you penalties and interest. So what you're trying to do is shoot for a refund at the end of the year, not so that you have this nice kind of refund at the end of the year. You're trying to avoid penalties and interest typically by overshooting, because if you undershoot, the IRS pulls out their stick and they hit you with it in the form of penalties and interest. So that's what you're trying to avoid. So taxpayers can check with their employer to update their withholding to submit a new Form W-4 Employer's Withholding Certificate. There's a link to that here. Make 2021 estimated tax payments. Estimated payments are another way for taxpayers to pay what they owe in separate quarterly payments. For tax year 2021, remaining quarterly estimated tax payments are due from individual taxpayers on June 15th and September 15th, 2021, and January 15th, 2022. So if you have to make these quarterly payments, you have to make them quarterly 4 times a year. And we have the June 15th, September 15th, and then January of 2022 next year, then remaining for these quarters. So the fastest and easiest way to make estimated tax payments is electronically using direct pay. Now, you can look up the instructions just basically to look up I think it's a Form 1040-ES, usually for like a sole proprietor to make the payment. And if you were to just make sure that you follow the process, send in a paper check with the proper form with it, making sure that they apply it to the proper period, you might not care that it takes longer for the IRS to process it, as long as they don't penalize you, right? As long as you don't get hit with the stick of penalties and interest that they wheeled around over there, then that would be okay. If it takes them longer to cash the check, not a big deal. You might be okay with that, right? If they were paying you, then with a refund, we want that processed quickly. That needs to happen. That needs to happen fast. I need that money in my account. If we're paying them, we're just trying not to get hit by the stick. And if it takes them a little bit longer, to process the check, may not be a big deal. But you still might want to do it electronically, because then you get to see that it actually passed and went through. And that gives you a sense of relief that the payment went through. They got it, and you can plan for it a little bit more that way. So you could do that with the direct pay or the electronic federal payment system. There's links to those here. And so like what you would do, of course, is figure out what your estimated tax payments would be. So if you are a new Schedule C type of business, you got to project and think about, and you could use prior year software to do that. If you did your taxes in the prior year software, may help you with that, or use the projection tool, figure out how much you would owe them on a quarterly basis, and then you may be able to pay them with a direct deposit or some other fashion, then figure out how to pay them and pay them, in some way, so that they don't hit you with the penalty stick and the interest. So taxpayers can visit irs.gov for other payment options. So more information can be found at the links below, which include the pay as you go, so you won't owe. That's catchy. The IRS isn't usually that good at their headlines, are not that impressive usually, but Anyway, estimated taxes, Form W-4S, request for federal income tax withholding from sick pay, Form W-4V, voluntary withholding request. There's links to those here, and there'll be a link to this in the description.